At Megatrade 101, we have decided to highlight the presentation of the Philippine Stock Exchange Index, starting off with the second quarter ending of the Philippine holding, where the blue chips conglomerates has the biggest weighted average contributing to the PSEI, thus making it quite important for us to be able to highlight the significance of how much of these conglomerates have contributed to the index strength based on the second quarter. As we could see here on the charts, starting off with the 6,500 level at the end of 2016, and as prices moved higher, as indicated here, with two similar configurations where prices are all based within the rising channel. This, of course, is attributed to the technical perspective, where we can see that prices has already established a rising channel, and within the channel we have a range where the price parameters of its trading is within a certain level. Now, as far as the year is concerned, to date, the percentage gain of 14.66%, but nearly flat at 0.57, with a slight dip below 0.13 before the end of the month of June, as indicated here on the chart. Yet the highest remains, or rather the highlight remains, negative, as we can see from the past 3 consecutive weeks of weaknesses, where it all started from after briefly touching an 80.46 high and a low of 77.34 for the month. This was achieved on the last trading day of the 30th of June, that culminated the 11 days of decline compared with barely 7 days of up move if you start counting it. On the next succeeding slides, we will be discussing the PSEI in itself, but we would rather focus first on the conglomerates or the holding companies, so you would see the similarity of the holding companies' chart formations alongside with the PSEI, or rather the index, as a tool, an indicator for the analysis. In our previous presentation, we have discussed how the two consolidation periods signified here and their relevant behavior when the tone of the market were fairly negative, and that is in spite of the established trend of the Philippine stock market has been in an upward trajectory, where we can see the behavioral trading patterns here as well as here, where the opening high and closing lower have been the relevant values of the daily trading done through the morning and afternoon sessions. The behavior of price action has been identified, where the common pattern well within the trading range was found on the sideways consolidation. Notice that these prices are compartmentalized within the rising channel. Actually, that is the reason why we highlighted a link that the prices have now has a narrow range, just waiting for a good break in the market. On the technical side, it looks negative. However, let's look at it more on a more detailed angle. where we could see that it's just resting on the support. This is a similar version where we have made an overview perspective. Thus, it's not really easy to make a market and price call. After thorough deliberation and process of deduction, the risk on the decline has already been identified from the higher bottom prices as a very good reference point of support. Yet, the higher probability of the PSEI to reach levels above 8200 level here shown on this yellow area to reach levels above 82 to 8550 is greater than the risk of a move downwards here. So besides a rising channel from two solid consolidation periods, while knowing that the fundamentals for 2 years of negative growth in 2015 and 2016, where these prices came from, would have to register a higher price. After the decline identified here, the extension or the extended consolidation period shaded in yellow is well within the range of the holdings high and low levels. With the rise on September 14, indicated here, finally breaking the psychological 8,000 barrier for the third time around, from the previous PSEI equivalent high at 81.36 and 81.15, respectively, the holdings index has a premium over the PSEI, which obviously carries a bigger weighted average over the rest of the industry sectors, thus dictating the major market direction of the Philippine underlying stock. And on this chart, the major market indicator that shows price direction up or down, the individual stock composing the PSEI generally follows with a few exceptions, which is actually a normal action. The PSEI, as we have said, has a target objective between and above the 8300 to 8550, which we have previously adjusted from 82 to 8550. Now it's at 83 to 8550 as the higher bottoms of these prices move higher, and in the midterm, the 8850 or better by early 2018. Last October 17, a market melt-up actually has been identified, and the results post melt-up was made available to us, correspondingly with a negative decline of the market from its peak of 8605 level, with Friday's new high at 8605 at this level, which had a moderate volumes to account for the rally, as corporate earnings beating expectations were giving the lift for the early session. The irony of having reestablished another wide range at 8365 to 8605 from this level gave the market a good reason for a considerable pullback, which is indicated here, and identifying the range from its high and low, where the pullback ended with the PSEI closing at 83.76, slightly above from which it came from. This is the type of market behavior which is to be expected and has become a normal behavior for institutional traders with the exceptions that this Friday's pullback was simply overdone, with the volumes and total transactions were not enough to sustain the rally. Losing steam resulted to an overreaction from the market, where participants that drove prices back to where they came from started unloading tail-end positions on Friday's liquidation. Similarly, with a rise and a fall, where there would be a cluster formation in the making every time this type of market squeeze occurs more on a volatile market. Now, with that said, we also highlighted here a link where you would be able to see exactly that the resistance had been created on this level that looks like typically a double top formation. However, the next slide will also present to you what we mean by this kind of market configuration. Finding a resistance level at these prices, as you could see highlighted with the yellow circled area, resistance is greater than any particular up move or rally, where we would see that a continuing pattern where prices would diminish or rather decline would prevail in the market. As a result, prices have met a level of resistance, as mentioned, which is now confirmed from three consecutive declines with a slight breather or relief rally, but not enough to complete, and a resumption of the downturn is imminent, plus a backdrop of regional declines fundamentally supporting the negative impact from Asia and a correction in the US equities adding more to the selling pressure. But some news agencies still reported that this decline were simply attributed to investor locking in profits. That said, for the lack of a better term, was actually securing profits made from earlier positions. One of our better highlights has been declassified and was part of the sequence analysis post PSEI market sell-off that were exclusive to our TSOC, Top Strategies on Trade members internationally, thus saying that prices breaking below the channel support. Now everyone had started to sing a different tune where they saw that prices is now on a major correction. As you could see here that we have compartmentalized the previous prices where a formation can be seen and two technical tools were also added whereby a Fibonacci pitchfork was a secondary choice to identify these prices. Please take note that the date and time, December 4, on the chart follows a certain idiosyncrasy with price actions identified more where when you place the cursor over the image, it also identifies a dominant third chart pattern where we will show you on the next slide. And that third pattern, which happens to be a Gartley bull pattern, signals that there would be the next price move expectations after this decline. But how many of you would really buy at this level knowing that the support channel has been penetrated. Well, the next slides and the presentation will provide you the reasons why the next probability for this is to move higher. Now, with that said, having an overlay of 5 weeks of trading within the new December month, we would expect a relatively volatile market to establish a new high and a new low well within the month of December. This happens or occurs especially when there are 5 relative trading weeks between the closing of November and the opening of December, being the last month of the fourth quarter trading for 2017. This is the first approach to price action combined with compartmentalized price data and technical chart tools that would give you a three-tier analysis where after establishing a relatively price performance of the PSEI, the third Gartley pattern or bullish pattern formation has been established where the next price level on December 4th states that the next probability is to move higher, also based on a compartmentalized historical price levels. Now, removing the two previous technical patterns that we identified, the prevailing or dominant price pattern is the Gartley formation, where thereafter, even if the channel support had been broken here and met a new level of price support at this level, where again the 80.51 level was marked on the low after coming from the two previous high resistance level. Now, the projection of 85 above 8500 to 85 level and above the 86 level is within range of the price movement. And this price movement was based on the previous total number of up and down moves from the first up, the second up, and the major correction here, more than 50% retracement would now be the higher probability that prices can go to that aims the 8550 to the 8600 level. This is now the overall view of how the PSEI market index have shown with two consolidation periods identified, a bullish Gartley price pattern, and the last trading day, December 29, 2017, after touching a high of 86.40 after the PM opening session started to move towards the closing where profit taking for the fourth quarter of the year had been made, thus giving everyone window dressing opportunity, but the real opportunity to see actual profits or gains for the PSEI for the year to date above the 25.1 percentage level. We hope that this would provide you a better glimpse and a summary of the 2017 performance of the PSEI, only the best to your trades for the year 2018. Have a great year ahead.